Let's talk money with Marcus Rain. He's the founder of Waves CPAs and former corporate CFO who's going to help us understand why financial oversight matters at every stage of your business and why bringing in a fractional CFO might be the smartest growth decision you make this year.
While as an entrepreneur, it's important to understand everything about your business, it doesn't always mean you have to do everything in your business. Most companies are not good at finance because they didn't start there. That's not the purpose of why they're in business. But yet money runs through the company. And if you don't have someone in there that's good, really good at finance or dollars or numbers or however you want to look at it, you're going to run into some problems down the road. Ideas are great, but sometimes they're expensive. And you want to make sure you can build a business off your idea and not just have it be a money pit.
We are graced with Marcus here again from Waves CPA.
Wave CPAs, yeah, great to be here again, Chelsea.
Last time that you were on the show, we talked about your journey as a founder, a first-time founder, building a marketplace where businesses can find and hire top-tier CPAs, and CPAs can either moonlight or turn that moonlighting into a full-time fractional lifestyle with these companies looking for their expertise. So how's it been going for the past month since launch?
Yeah, it's been a great start. We've had some great traction already on both the CPA side and the clients coming to the platform. So we've got some good matching going on already. We've got some good feedback from people. But more importantly, we've been out in the marketplace communicating to Minnesota, and which is where we're based out of, and at a national conference 2 weeks ago in Las Vegas. So we're getting some really great exposure into a lot of pockets of the country. We're excited to continue to build the brand and build awareness that Wave CPAs is here to help connect businesses to high-level finance talent, and with the ultimate mission to inspire and empower the next generation of entrepreneurial CPAs.
I love it. Question: how hot was Vegas in June?
Tremendously. I believe we were 1 degree off the record. I think it was like on a Tuesday in mid-June. So it was like 105 or 106 degrees. They say it's a dry heat, but I don't care who you are. If you're walking outside, in business clothes, you're gonna be warm. So it was toasty, but the not as toasty as being out there for 6 hours in a golf tournament. We got to play at Paiute for the ASCPA's foundation tournament, which raises money for scholarships for future accounting students. So it was great. It was a great cause, and they put on a great tournament every year. In fact, the guy that runs it, he's out of North Carolina, so right in your neck of the woods.
Yes, I'm
Chris,
always looking for local friends, so I'll find him.
his name is Chris Radford with the ASCPA Foundation, and he does a great job running a tournament. And he's a good friend of mine too.
Great. So you've been out on pedaling around, spreading the good word of your startup. I'm here today to pick your brain as a business owner myself and on behalf of other business owners to even understand what is a CPA, when do I need it, what do I need it for, and why I don't just need like a QuickBooks connected to my website and I'm all good. So let's start with what is your definition or the actual definition of a CPA?
Yeah, I mean, I think I'd like to start off with what a CPA can do, because the definition is in the letters, the certified public accountant. The CPA can do more than just taxes and audits, which are what companies typically think of. And this isn't everybody, but the general consensus when I'm out in the market is, oh, you guys are a tax firm, or oh, you can do an audit for me. Precisely none of that. Wave CPAs is focused on a different value that CPAs bring to companies, more so on the advisory side. So how do we help companies grow? How do we help companies improve their internal processes, their systems? And in some cases, CPAs have leadership experience, so we can help grow people too in the organization. I want to impress upon anyone listening on this that when you think of a CPA, you can think of taxes and audit. That's great. There's probably a background there. We've all studied it, but that's not majority of what we study to become a CPA. It is a place that we do specialize, and it's a very important part of our profession. But our platform is focused on helping companies grow beyond taxes and audit.
When you talked about CPAs before, was it only like a small percentage of what you had to study the taxes for the test?
Yeah, I'm trying to remember approximately what percentage of that was related to taxes. It's been a while since I've taken the exam, and I know it's changed over time. Yeah, it's definitely not the lion's share of the CPA exam.
If you're a business owner, even the way that you incorporate or start your business can have implications for your finances along the whole journey and life cycle. So I didn't do this. I just went on LegalZoom and started an LLC. I've seen YouTubes that said, "No, girl, you shouldn't have done that." But what should a business owner be thinking about in terms of their finances throughout their life cycle of their company, from when they start all the way through to when they maybe are ready to be acquired?
For sure. Well, let's talk about a small company or even a startup. A lot of entrepreneurs, they've got a great idea. They're passionate about something. There's, an opportunity in the marketplace that they would like to explore. And typically when they start those projects, they're not starting them because they want to be a CFO. They're starting them because they have an interest in selling a service or a product or solving a problem. And that's great. And that's where the business needs to start. But you shouldn't do that on your own. You should have a co-pilot. If you want to be the pilot flying the plane of how you're going to help people, bring a co-pilot along with you. A fractional CFO is a great way to leverage a shorter, less full-time person, while you're starting out, and they can definitely help guide you through some of the challenges and issues that you might face starting out. Surely you can set up QuickBooks online and do the basics, but then what? If you want to go out and get financing, if you want to go out and get strategic partnerships, they're probably going to ask for some things that would make you work a lot harder to get those things, and probably make you research a lot more and spend more time on those things, distracting from your real purpose of the business. And while as an entrepreneur, it's important to understand everything about your business, doesn't always mean you have to do everything in your business. And a fractional CFO or fractional controller can definitely help you out in those early stages to make sure you're setting things up right so that you don't have problems down the line. They can help you think through various financial strategies and pitfalls, and they can definitely help align you and your growth strategy in a dollars and cents way. Ideas are great, but sometimes they're expensive, and you want to make sure you can build a business off your idea and not just have it be a money pit.
And say that, so that's early stage. You still have to be thinking about this financial stuff. Now, say you've got customers in the door, it seems to be going well, you're growing, and you still haven't had anybody in that seat yet. Why would you now consider to get a CPA or a fractional CFO?
Yeah, it's a good question. Yeah, let's think about more of a practical situation. Let's say you hired some salespeople, maybe you hired an operations person. You've got some admin staff helping out. Your costs are growing, and your revenue is growing, but you're not quite sure where everything is, and you're not really sure if you're missing revenue, or you're leaving revenue on the table, or you're not collecting fast enough, and there's maybe some interest rate arbitrage that you're missing because of that, and maybe you're just not sure if there's more cost effective ways of doing things. And I'll say this, in business, there's always a better way with your costs. You want to spend money where it's important and it's a good investment, and you should spend more money when it's a good investment. But there's definitely some wasted costs that run through businesses every single day that most small business owners don't know or don't see or don't realize. So that's where you have an individual like a fractional CFO or controller, and if you're coming through Wave CPAs, you're going to get both of those types of individuals, and these people can really look under the hood and help you understand finances to make sure that you're not leaving things on the table, and make sure that you're maximizing where your costs are going throughout the business. And you might be a 5-person company at this point, or you might be a 20-person company and you're really growing, or a 100-person company even, and things are really getting out of control, and you're just like, well, we've had a bookkeeper, and maybe that's not good enough. Maybe we just don't want someone doing the transactional work. We want someone to be a little more strategic with what we're doing. We've got some large growth initiatives, and we'd like to expand, and we'd like to go into other states. Well, there's a lot of compliance requirements with that, and there's a lot of tools out there, but you still need to have someone execute on putting those into place. And again, as an entrepreneur or small business owner, you didn't get into your business to put in those systems and infrastructures that allow you to grow and expand in a safe and healthy way and be compliant. And that's where bringing in an expert, a financial expert, would be a really very smart idea to both protect you and make sure that you can grow in a healthy way.
Like having a panic attack about how I've set things up, but this is great. So fractional is basically a fancy way to say part-time.
Exactly. Yep. Just a fraction of the time. You may look at this person coming in 5 hours a week and having meetings with the team to ask thought-provoking questions, make sure things are running smoothly, just kind of as a backstop. Or you might look at someone as a 10-hour week individual and say, okay, we actually need you to do some a little bit, review of what we're doing on a routine basis and make sure that we're doing the best thing we can internally from an internal controls perspective, making sure the cash is there in the right areas. You can go up to 15 to 20 hours a week, and this person is maybe a little more involved in leadership stuff. They might be part of your L10, your EOS speak, your leadership team meetings, and being more active in the strategic growth of the company. Again, these are individuals who have tested across multiple areas of business, and they really understand how they work. They're going to be able to give some advice and some best practices, and really make sure that the company is being well taken care of and set up for future success.
As a company, if you're kind of you need this help, you say, "I need someone to help me with the finance stuff." Is fractional a good way to dip your toe in it and see what kind of person you need or find out where you have gaps?
Yeah, I mean, that's a good question. The gaps question is really good because a lot of people don't realize they have gaps in the company. And I would say for anyone that's trying to sell a good product or a good service, you are that expert or you are providing really good value. That is a very good, you know, business. If you want to be in the business of selling something that someone wants, you should be good at it. Most companies are not good at finance because they didn't start there. That's not the purpose of why they're in business. But yet, money runs through the company, and if you don't have someone in there that's good, really good at finance or dollars or numbers or however you want to look at it, you're going to run into some problems down the road, and they may be small or they may be big. Every company is different, and you better believe it. Every company does run through some their own issues at some point in their company life cycle because of money. So you want to be able to mitigate those risks and mitigate those pain points by making sure you've got someone in there that can really be good at what they do, so you can be focused on doing good at what you do.
Do you have any examples of early stage or mid stage company financial whoopsies that you uncovered that you can share?
Yeah, well, I think this is a good one because you wouldn't think that this is really a finance problem, but finance and accounting, that's where all the numbers fall to. They all fall to your profit and loss statement, your balance sheet. So, as a fractional CFO myself, you have to ask a lot of questions when those numbers end up in your financial statements and they don't make sense. There was an HR situation that was occurring at a company, and you wouldn't think that HR would fall under finance, but because that's where the dollars go to, that's where we have to ask good questions. And there was a situation where I was prompted because of where the numbers were going to ask questions in HR. Why are we handling this? I'm trying to make sure I'm sensitive to the information. Why are we handling this employee conversion, this particular way? And they were unsure, other than the fact that that's the way they've always done it. And the result was that they were actually doing something that was against company policy and was essentially costing the company money that was unnecessary and unfair to other employees. So, because those results ended up in the financials, it prompted us to ask questions. Why is this happening? Why is this different? And we uncovered something that needed to be changed and rectified. Therefore, would save the company money going forward, because obviously there were costs that were being consumed in the past that were unnecessary and against company policy.
I even have stories, we won't say names, but of expense reports costing like months and months, years sometimes of just paying for personal things on their company card. No one's catching it, but they're like, why is this person so much higher? And it adds up over time. And not only is this person not someone really trustworthy you should have at your company, but it's costing your company too. So it's like a twofold. Why didn't we see this coming?
Right. Yeah, and if you've got someone that's reviewing again the financials and your expense reports, you're going to catch those problems, because if you've got someone that's conducting themselves potentially unethically or against company policy, maybe that's just one area. Maybe that's indicative of where they're hurting the company in other areas. And do you really want that person in the company? That's a larger leadership question, a management discussion. But if you don't have your employees respecting your company and the company policy around expense reporting, there's a possibility that they're not respecting it in other areas that are hurting your business, or effectively you're paying someone and you're not getting the best out of them. Maybe there's a better person for that role.
Another thing I've seen in medium businesses growing, like going from, say, 20 to 250 in a year, is the silo effect. And I call myself a silo slayer. Just every department ends up getting their own tools, getting this, getting that. And it takes until the end of the year when you're reviewing everything to say, holy shit, we have 3 tools that do the same thing across departments. Is that something that a CPA could help with?
Yeah, I think that if you've got a CPA that's acting as a fractional CFO or controller, and you've got, you set out with a budget of expansion, you can really kind of funnel all those activities in through that office of the CFO or office of the controller. And whether it's their team or not, or that specific individual, they can see the synergies across those multiple platforms and have conversations with people. You've got this software and it does these 5 things. You've got the software does these 6 things. Do you need the 6th thing, or can you get by with Excel for that 6th thing? And we'll just use one tool, and now you've cut the company cost down significantly in that. I'm assuming what you're referencing is a subscription. So on a monthly basis, you're getting continuously charged. Well, now you just saves the company potentially a lot of money before it ever got caught, until the next budgeting season rolled around. Certainly, budgets are meant to protect the company's spend over a course of a year, and there are business cases to go above and beyond budget. But a good controller CFO will make sure that there's a good budget in place and that those exceptions or deviations from the budget are well justified with business case. Not something that every owner wants to spend their time focusing on, but if they have a trusted partner or a trusted co-pilot, making sure that the money's being protected, then they can feel comfortable that you can expand and grow and make sound business decisions, having the CFO giving authorization to those.
For sure. I can just envision some CEOs I've worked with where I go up and say, "Hey, I need this thing." They say, "Sure, go get it." And if they're that busy and they're just saying, "Sure, go get it," to me, they're saying just like trusting their team to go around and go get it. But we didn't have any checks and balances where we had to go through a procurement process because we were still kind of small. And that's where a lot of the inefficiencies and double spend was happening.
And it doesn't even need to be a long drawn out process, but you do have to have someone that can make a sound professional judgments on the spend. And it could be a 5-minute conversation with a Chelsea and saying, hey, what do you need it for? What's it going to do? What value will it drive for us? Do we have anything else like in the business? Have you talked to other team members? Asking just some basic level questions with maybe sound intuitive and not necessarily complicated questions. But when you've got someone that understands where the costs end up, and that the accountability of the financials is that of the CFO or the controller, they're going to ask those questions to are more inherently their responsibility. So they want to know exactly what it is that the company's buying. So that 5-minute conversation could be simple and painless, but could actually have a lot of value whether the decision is approved or not approved to go get that software.
Now, say that this company's grown and I'm ready to sell it. I'm like, I'm going to retire. I want to sell this thing, or I'm bored and I want to go do something else. How can this stage of my company's life benefit from having a fractional CFO or CPA in house?
Yeah, it's a great question. I've actually seen this a bit lately. There's a lot of companies out there with the older generation, the boomer generation, looking to retire, thinking about retirement. And they say say to themselves, well, my kids don't want to take it up. I might have to go find someone to buy it, whether that's a private purchaser or an investment group. Whether it's either of those two, there's going to be some level of due diligence that needs to be done for that company to be bought. Any investor is going to want to know where your financials are, what your processes are, how much they can rely on those financials. And while there are external diligence processes that are done, and potentially even CPA firms that will assist in those diligence processes, it's still important to make sure that your inner workings of the company will pass those diligence tests without a ton of revisions or remediations, because that can be costly and timely to the sale process. and effectively could hurt the overall valuation. So there's problems that can come up if you are an older generation company and you've been around for a while. Maybe you've had a bookkeeper for a while or a controller, and maybe they've just kind of haven't been challenged to change, and they've kind of done the same thing year after year after year. Well, there's a good chance that your business has grown or changed in some way, and the processes and the financial reporting hasn't changed. So, you know, there's going to be imbalances there that need to be checked, and probably changes that need to happen. And it could be even something as large as needing to put in new financial systems, and that those can take 6 months to a year or even a year and a half to complete before the company is actually saleable or in a place that is going to be able to get you the highest price for your company. So if you're thinking about selling a company, whether it's now or in 3 years or 5 years, you're gonna contract with investment brokers down the road. You're gonna contract with potential assurance firms, quality of earnings firms, business valuation firms, and they all have their important part down the road. But you can kind of control those future costs too by having a finance expert in your house today, and making sure that things are set up well. And if you're running through Wave CPAs, our rates are typically lower than majority of those firms on an hourly basis. So you're going to get lower cost remediation or corrections of your internal financial processes than you would have to pay later on. So it's just a good idea to make sure you're planning well for your exit.
2 points came out of that. The bookkeeper who's been crushing it and doing their thing for 15 years, but not really changing. You can still keep that person, and this fractional leader coming in will up their game and supplement them, because I'm sure they have their day-to-day already maxed out. They don't have time to start thinking about all this and learning all these new skills.
Absolutely. And because the company's probably grown, if that bookkeeper hasn't updated their processes to be more efficient, a finance expert coming in can still bring in a lot of valuable insights to bring more efficiency to that bookkeeper's day to day, and potentially even free up their capacity more. You kind of want that anyways, because if you can bring in some efficiencies into your accounting department, then they've got more capacity to work on projects that will make that company more saleable and get you that higher return without having to hire more FTEs. So that's one way to think about that investment too, in a fractional CFO or controller, especially through Wave CPAs. You can find someone that will bring efficiencies and also bring you more value longer term, just with the staff that you have and not having necessarily to add more.
I've benefited from having a CEO bring in fractional folks. So I had a fractional CRO come in, coach me up, fractional CMO coach me up so I could get all of the skills and have them be on my side, by my side, both
Both.
during some of these big transition projects. So I had somebody to bounce these ideas off of and then learn from them as we go. So it is awesome to bring in someone to help your current team. The second question I had for you is, it's always better late than never. But if you are thinking about selling your business, what's a suggested minimum time frame you give to start looking at your finances before you go out
I would
and try
say
to sell?
safely a year. If you want to sell your company in a year, you should definitely start looking to have something in place now. There's cycles that happen in business and in finance and taxes that are a year long. So that's the minimum. You might want to look at a 2 to 3 year horizon, even if you really wanted to be smart and strategic about it, because there might be an opportunity there to get those things in place, and then not just make sure that your internal finances are right and that they'll do well in a diligence process, but leverage that now fractional CFO or controller to add more value. So it's more about saving not just protecting the value that you think your company's worth, but by leveraging them to get you even higher valuation. So the longer you have an internal finance expert like that in place, whether you've got one already and you just need more horsepower, because it's very possible that to have a CFO in place and still need to bring in someone to support them and bring in new ideas, not necessarily to sit on top of them in an org chart, but to maybe partner with them, because those relationships are important, and that maybe that person was with you for a long time. But it doesn't mean that the company doesn't need help and they don't need help to grow and change, especially as you look to exit a business or make some sort of other strategic move.
What are some examples, if you can share, of when a financial partner would help you raise your valuation?
Yeah, so let's say you've got a good product company and it's done, fairly well over the last couple of years. Maybe sales just haven't really gone up more than, 2 to 5% in the last year. Maybe the market's grown. Maybe the market share which you could take has grown. That's where you want to go, and I would say that's less about the fractional controller type mentality, and that's more of the fractional CFO mentality. Is they're going to look at the global picture and look at the forecast and future and what's out there and what's available and say, well, your margins haven't changed. Your value in the marketplace has grown. Why aren't you charging more for it? So you might be able to gain more gross margin for your product, which improves the valuation of the company, gets your EBITDA higher. But they could also look at your sales strategy. Do you have inside sales and outside sales? Because we look at the financial performance of the whole company, we look at compensation and payroll in the P&L, and we can say, well, why hasn't their compensation changed even though revenue's grown? Or maybe revenue is stagnant and their compensation is stagnant. What if we paid them more? Would they would sales produce more? Would you be able to have more customers? Would they be more incentivized to go out and find new markets that we're not tapped into yet? I just asking those questions, which all have a foundation of numbers and dollars to them. I think that you could spark some thought at least, and maybe some really good discussion with an ownership group or with a management team to get the company into a higher revenue state or a higher gross margin state.
That's cool. It's having somebody come in and ask you questions you weren't even like, "Oh god, I wasn't even thinking about that."
Yeah. And the hard thing that it is for every business owner to do is to accept that. Why didn't I think of that? I should have thought about that. It's so hard to admit that vulnerable feeling like it's my company, I should have known. And this goes out to every business owner. Don't feel bad. It's okay. It's impossible to think about every aspect of everything in your company all the time. There is so much going on. It's really okay. And a fractional CFO that is worth his salt or her salt will be able to sit there and sit down with you and have a real genuine conversation and say, it's not about the past. It's about what we do in the future. And we're here to work together to get the company the best place possible. And people will understand that. People will understand that, every owner has a lot going on. It's impossible to keep your thumb on everything. Your team just wants to see that you're making the right decisions for the company, and bringing in a finance expert if you don't have one, or even more financial horsepower if you do have in an internal finance team. They'll see that as strength, and any perceived weakness that you might have of yourself or not, understanding those KPIs will be overlooked.
So we've gone through the full life cycle from when you're starting your business to when it's grown to something that's working and it's big to, all right, now I want to sell this thing. Is there anything else in the life cycle that goes overlooked from business owners or leaders financially?
Yeah, I think that every business owner, if you have a family, wants to know whether or not your family will take over the business. That's something that I think prior generations cared about for legacy. And uh, a fractional CFO can be there through a transition period like that and give that comfortability to an owner that through the transition or through the sale, quote unquote sale of the company to maybe a son or a daughter or other family member, that financial integrity, the business integrity can still hold, even though that original owner, the parent or relative, is no longer with the company. Having that stability can also add a lot of confidence that the transition will be smooth and that the family member will be, I guess, more supported through that experience, because it's effectively turning over the entire company to someone who may not have gone through the trials and tribulations that owner did, and so maybe they don't have all the experience and expertise needed, but at least there's a good financial backstop there with a fractional CFO in place.
That makes sense. How many people are selling to family members these days? I want to know.
I think the number's gone down. I think that more people are focused on building their own, but that's just kind of what I've seen in my small bubble. And this could be wildly wrong. There could be more and more. The common term is nepotism, and there could be more and more of that. And I'm unsure. But if it were me, if my parents had a successful business that I knew that I could take over and run and be successful with, and I would definitely be buying their business, if especially if it was expanding and growing. That sounds like a great way to continue a legacy. So I really hope that my assessment is wrong, because I believe in legacy, and that's my personal opinion. And I would love to have my sons and daughters take over my companies and continue to grow a family business.
We don't have that in my family, but it would have been cute.
Those are
Would
great
have been cute.
stories. Yeah, those are what
Yeah.
I believe. Those are what really create generational wealth.
All right, we've gone through the life cycle. I have one final question that's related tangentially. We've now figured out, okay, I need help with the money things. How do the different options of who's going to do it compare? We've got full-time employee you bring in, we've got big firm or consulting firm, and then we've got part-time slash fractional. How would you compare those three? And is there a fourth?
Yeah, I think it's important to look at every situation individually. There have been so let's compare a full-time person to a fractional person. And I'm just going to pick the controller role, for example. If you were to bring in a fractional controller, for 20 hours a week, let's call them a highly motivated fractional CPA. They're efficient. They're in there to get things done in a short amount of time, because they're only there for 20 hours a week and they've got objectives they want to hit. So they're going to inherently elevate team's productivity around them for those 20 hours while they're there. So if you've got a bigger team internally, you're going to get more productivity out of those 20 hours in a week, which is 50% of the time. If you have a full-time team and you've been exploring a 4-day work week, let's call it they're working 40 hours, and you're saying, well, let's take a look at this 32-hour work week. It's probably nonsense, but let's give it a shot. I've actually heard a number of success stories in Minnesota of companies moving to a 32-hour work week, and productivity has gone through the roof. Not only are people able to get their job done in 32 hours, they're getting more done in 32 hours. So what does that say about the W-2 employee working full time? Not in all cases, but in some cases, there may be employees that are stretching their time out throughout the week, that are mismanaging their time. Effectively, it could be a problem for the business. That could be a cost to the business. So what that scenario says to me is that maybe an employee, full-time W-2 employee, isn't always needed. They're not really that efficient anyways. They're filling their time out in a week so that they get to Friday at 4:30 and then they can go home. But in reality, maybe they could be done by Wednesday if they were really motivated and productive and to do so. So, if you incentivize someone to do that, do the work and get it done, they may. In my case, as a fractional CFO, that's where I've been. I've come into companies and I've worked 20 hours a week, and I've gotten the job done of a full-time CFO in that time. Not only have I gotten it done, but I've brought in more efficiencies in the processes. I've elevated the staff around me, given them more accountabilities and responsibilities, and helped coach them through areas where they need improvement. And those are things that can be done in 20 hours a week with a highly effective fractional CFO. So it's not always necessary, I would say, to bring in a W-2 full-time person. Comparing a fractional CFO internally like that, like an independent person, versus someone who's working at a CPA firm. A couple different ways to look at this. It's very likely that let's call it a CPA at a CPA firm providing you fractional CFO services. It's very likely that CPA did not get to choose to work in your company. It's not maybe their interest area. It's maybe not their passion area. It's maybe not their area of expertise. Or they don't have an interest in really learning and helping that company grow, because they've got other clients that the firm expects them to do and other different types of service engagements. And because they haven't maybe necessarily been given the autonomy to make those decisions to help your company, you may not be getting the full value of that spend. So, as someone from Waves CPAs, they're all independent CPAs. They're all choosing to work with you because of a common interest, because they're passionate about helping you grow, because it's their brand and their reputation, as opposed to a CPA firm looking good necessarily. It's not necessarily always in maybe a senior manager at a CPA firm's interest to grow the firm's brand value with the one client. Some cases it is. But then there's the cost you want to look at too. A CPA firm has a lot of overhead costs, but when they offer a fractional CFO service to you, it might be at a rate of 300 to 350 or even $400 an hour for your regional firms. Or, if it's a bigger firm, it could be $500 an hour. With Wave CPAs, we really pride ourselves on our efficiency with our overhead so that we can offer clients substantially less than CPA firms and be able to pay CPAs more. So we are incentivizing CPAs to put in the time with their clients so they can help grow. If you're on a fixed fee with a CPA firm, that CPA is incentivized to go in and do the bare minimum so that the realization is really high, so that they look good internally at the CPA firm. Not necessarily to continually add more value to the client and have those conversations that are billable, but because they're on, a fixed fee engagement and they can't charge more to the client, so they'll never earn more money on it. And the CPA doesn't earn more money on that time worked either. So what's their incentive to add more value? That's the importance of why we do hourly, why we've set up Wave CPAs to be hourly, because we want that CPA to be incentivized to spend those extra couple of minutes with that client, have that conversation that might move the client in a very drastic direction to more financial success. And I think owners want that too. I think they want to have that dialogue. They want to have that confident conversation because, as an owner of a company, sometimes it's low. Or you don't have someone to talk to about your financial decisions or the business's strategic direction. And so it's important to be able to have that conversation. And, you're probably going to feel a little more comfortable doing it with someone that is there and cares and wants to have the conversation than someone who's maybe just trying to maximize their KPIs at their firm.
As someone who's been fractional myself for a while now and hang out with other fractional folks, I will say that it's a personality thing as well, that of someone who's coming in, even if they're hourly, you could have a flat rate for fractional, but even if they're hourly, they're the type of people that are hungry and don't like being bored. That's why they went off and did this type of work,
I agree.
because they were probably sitting in a firm that was, you have to sit at your desk for 40 hours a week and just, this is all you can do. It's so boring to certain personalities. So they're going to fucking hustle.
Absolutely. Yeah. And that's the benefit of Wave CPAs is that they're building their own brand. And so they're going to care about the output and they're going to care about showing up for the clients because they chose to work with that client. They chose how many hours a week they wanted to work and they chose this lifestyle as opposed to a W-2 lifestyle. It's not for everybody, but for the ones that do come into our platform, they're there because they want to hustle, because they are entrepreneurial in nature. And that's where we think that kind of work style and personality blends well with an entrepreneur inside of a company.
Well, I have so many more questions. I know we're coming up on time about, how to think about finances inside a small or medium growing business. And we'll have to have some other sessions. If you've listened to this episode or watched it on YouTube, just drop in the comments what other questions you have and we can lock Marcus down and pick his brain a little bit more. But anything you want to leave the audience with from life cycle or why consider fractional?
I would just say that there's always a better way. Challenge the status quo. There's a common expression in the world of accounting. It's called Sally, same as last year. And if you do the same thing that you've always done, you'll always be where you've always been. So challenge the status quo, challenge yourself, what you've been doing, and think about whether or not there's a better way that you could be doing something.
I like it. Keep pushing, keep growing.
Absolutely. Thank you so much for your time today, Chelsea.
Thank you. We'll see you again soon.
All right.